SoFi's Q2 2022 earnings results are coming right around the corner, on August 2nd to be exact. And so I wanted to do a little bit of research to try to find out if we can anticipate these earnings coming up, see if there's any indicators on whether we should buy or sell shares before we actually get the true release of their earnings. And I have found some things that will absolutely blow you away, so stick around. So the first thing I did was look at the other competitor banks that SoFi goes up against. These were more of the legacy banks because they all sort of report earnings on the exact same time. So they've already shown off their Q2 numbers. So let's take a deep dive and see what, Goldman, Bank of America, and JP Morgan are doing. And as I read through these results, I want you to try to see if you can spot any trends going through all of these different bank earnings results. So let's start with Goldman. So whenever we look at Goldman, obviously there are a ton of things, but the things that actually translate to us is the stuff that I want to read. So one, their consumer and wealth management net revenues were up 25% year over year this quarter. However, their investment banking industry, revenues were down over 41% year over year. Insane. Then whenever we look at Bank of America, we see a 29% decrease in their earnings per share year over year, okay? That was actually minus 5% to what Wall Street expectations were expecting. However, they did see a lot of revenue growth, obviously, which is to be known because obviously we were in an inflationary environment, but those earnings per share were down. Payment revenues, however, were up 13%, so that's quite interesting for SoFi. Obviously, we're big into the payment game as well. Now, net interest incomes increased by 22%, which they say was driven by high interest rates and strong loan growth. Okay, very, very, very important for SoFi, strong loan growth. But non-interest income decreased by 9%, driven by lower investment banking fees, once again. Now, JP Morgan, again, saw amazing loan growth and deposit growth, which were both expected in this inflationary time. Now, their consumer banking industry, only revenues were down 1%. Payment revenues were up 1%. Lending was up 79% year over year, but then on the investment banking side, they saw revenues down 61%. Then in Truist Financial, they saw results reflecting strong loan growth due to higher rates and strong deposit growth. They saw payment-related fees increase by 16% and investment banking revenues down 37%. Are you catching the trend here? Morgan Stanley missed estimates as revenues from investment banking fell a whopping 55%, yet new asset inflows increased, which was to be expected because it's inflationary. And however, their loan business grew a ton, up 25%. And Citigroup, last but not least, right? They saw average loans actually grow by 17%, and they saw investment banking fees decrease by 46%. Okay, I'm done calling out all the banks for now. If you didn't catch the trends, let me tell you them, okay? Loans increased dramatically due to higher rates because we're in this inflationary time, and so, the Fed funds rate has to go up, which means that, all the competitors also have to raise their rates, so the revenue goes up. That doesn't necessarily translate to actual incomes, but for revenues, it's great. And I want to stop for a second and really talk about what investment banking really is, because it's so important that we even understand the industry to understand why it's collapsing. Investment banks underwrite new types of debts and securities for all types of different corporations. These are the banks that actually assist with companies that are actually IPOing onto the markets and also help facilitate mergers and acquisitions and everything along these lines while collecting fees and advisory fees all along the way. The reason I bring this up is because SoFi Bank is a retail bank. We are not even an investment bank, so we don't do anything along these lines with sort of IPOing on new companies. Maybe one day, maybe 5-10 years from now, maybe we'll get into that, but for now, we're really just focusing on the retail customer. Meaning that where all of these other banks are faltering on their investment banking sides, we won't have any of that downside this quarter. Yet, where they're all achieving in terms of their loan growth, okay? Even though they all have small, portfolios in terms of their loan growth, SoFi, almost 75% of our business is made up of loans, and it's by far the biggest category that if we start to overachieve in terms of our loan category, that we are going to absolutely explode. This is why it's giving me the most hope that we're going to have a positive quarter, is because every bank is saying that although we're being held down by our investment banking fees, which SoFi does not have, our loan department is going to absolutely accelerate, just like all the other banks did, and that makes up for the majority of the income that we're making this quarter. I just wanted to add another side note onto that, just overall, that all of these banks also said that they had higher mobile users this quarter, as well as higher digital-only sales, which is very important because that could mean higher adoption for SoFi in the long run if clients are happy with using a digital-only product. Now, for the second thing that I looked at was the bank charter taking effect. Now, although SoFi Technologies has been around for a long time, SoFi Bank has only been a fully licensed bank in America since February of 2022. Before that, SoFi Money was simply a cash management account, and we had to pay other companies to actually hold our money for us, and that costed us a fee. But the benefits of the bank charter cannot be underestimated. I actually have a quote here from their Q4 2021 earnings call where the CFO, Chris Lapointe, actually points out something very important. He says, "The incremental net interest income from SoFi Bank will only contribute nominally to the Q1 results. And prior to fully originating loans in the bank, which we expect in May of 2022, this quarter. That's because when we opened the bank in February, we did not contribute any existing loans to the bank. As we initially capitalized the bank with cash, we are still transitioning our operations to having loan originations occur from the bank, and that transition will not be fully completed until the end of May. That means that this quarter will be the first quarter where we actually start to see the true power of our banking charter. Before, whenever we had to fund our loans, we would go to outside credit sources to actually fund our loans. These are called warehouse facilities. The rates that we would pay today for those warehouse facilities would be anywhere between 3 to 6%. With using our own deposits to fund the loans, it's not free because obviously we do have interest rates on our accounts, but it's somewhere just a little over 1% interest rates rather than the 3 to 6% that we would be paying before we had that banking charter. This can save us a fortune on the bottom line and actually really try to help this quarter whenever it comes to earnings per share. However, this is going to be sort of a balancing act between how strong is this banking charter versus how high these rates have gone and how much we can actually pass on to the consumer. We definitely will lose, just like every other bank that happened this quarter, we will lose some money on our bottom line because it's always hard to pass on every dollar that the Federal Reserve passes to us. In the last interview that Anthony Noto had, he said that we only really pass on about 70% of the interest rate hikes. So we are actually taking a hit every single time that the interest rates are increased. But, with other things like this banking charter, it could be still that we are way in the positive. The next thing that brings me a ton of hope is the fact that the Technisys acquisition is actually going to be on our earnings report now. So whichever amount that they can actually make up this quarter is actually going to be what's reported on our earnings statement. Now you have to remember that this is not just a sign of growth, right? Because obviously we had to pay for this company. The real growth is going to be whenever we can actually cross-sell to different Galileo and Technisys clients. That's going to be where the real acquisition comes into effect, or else we just bought an overpriced company. But the fact that we're going to bring on what's potentially, early quotes are saying $5 to $10 million whenever it comes to Technisys earnings this quarter could also just add a little bit more of a benefit to us and potentially bring us over that, sort of beat whenever it comes to our earnings expectations. Now I got this amazing quote from Anthony Noto from Q1 2022 earnings presentation where they said Galileo and Technisys are already going to market together to offer new products and services to Galileo clients looking to expand their lineup. Early reception among existing Galileo and Technisys clients in the US and Latin America has been very positive. Now, he spoke about this back whenever we were in April, so this was probably already into Q2. Now, that's very, very exciting because it could show sort of an early glimpse of how we've already seen some cross-selling, and that could show up in this quarter's reports. Add on the fact that all these other banks, whenever we spoke about them in terms of their competition, also said that their payment industries were very high. I am incredibly hopeful that the technology platform side of the business is absolutely going to outperform. Oh, and just on a side note, the banking charter and Technisys and Galileo also come together because now we can actually offer these clients a sponsoring bank. So this quarter, it's going to be very interesting to see if, Anthony Noto or Crystal Point, whoever actually brings up whether or not we've actually seen any sponsoring banks. Now, this could lead to one of two things. First, that we could simply be making extra money because we're charging them an extra 10 to 12 basis points on the assets under management, which could really start to add up whenever we're talking about large institutions and their millions of clients. Or this could be potentially a new selling point because we can offer these new customers, say, hey, we can actually offer you a 10 to 12 basis point decrease because we actually have a relationship with the bank. It's us, right? So we can actually go to market with a better opportunity than any of the other competition could ever do. Just to remind you that there's not a single other company in the world that has a sponsoring bank that also has a payment infrastructure platform and a just core banking infrastructure platform all tied into one. SoFi is the only one in the entire world. Now, for the next point that I wanted to bring up, I wanted to talk about Anthony Noto, the CEO of SoFi Technologies, buying his own company with his own money. Just within the last 3 months or so, he has added over $3.5 million worth of his own stock with his own money. These are not options purchases. These are cash purchases that he's declared. And it's an important indicator because at first, whenever he was buying initially, people thought that he was doing it to sort of pump the stock. But as you can see, over the long term, the stock had only gone down while he was doing this. So obviously it had no effect onto the investors, yet he still continued almost on a daily basis whenever it came to months like June, for example. Now, for my next point, I'm not actually sure how I feel about this information, whether it's a positive or a negative, but I want to talk about it anyway. And that's app downloads from Sensor Tower. Now, I got this information from Cha-Cha, and I'll link his Twitter down below in the description. He's getting this information from Sensor Tower where it breaks down SoFi's iOS downloads and then their Android downloads. Now, you can also see down here where they actually came in, how accurate they were, right? So Sensor Tower anticipated 650,000 downloads. Maybe that's true, maybe that's not. But the amount of actual members that came in was 523,000 that quarter. So it only came came in 80% of what it was saying it was supposed to. And then Sensor Tower actually anticipated 380,000. What actually happened was 408,000. And that was 107% of what, actually happened. So how accurate is this true, Sensor Tower data? We're not really sure, but the actual numbers come in just a little bit if we're including them both, 10,000 below what we saw last quarter. So is that great? No, that's not great, but we are seeing quite high numbers whenever it comes to iOS downloads, which is quite exciting. This 30,000 estimate whenever it came to April just doesn't seem like it fits into the estimate. It seems extremely low, so I'm hoping for an overestimation of what they actually said. But currently, the Sensor Tower data is roughing in around 370,000 new members. Now, last but not least, I wanted to talk about technical analysis, okay? And now, if you know me, I'm not a true fan of technical analysis, but I wanted to bring it up in this video regardless. Goldman Sachs options analysts came out and said that they had spotted a valuable clue to understanding stock performance whenever it comes to earnings results. They said that stocks that underperform in their stock price 2 weeks before they actually report earnings is a very important indicator for how positively people will actually react to their earnings coming out. They pointed to a 20% increase in the chance that the stock would pop on earnings even if it was given a modest earnings result. So make sure you guys keep an eye out between now and August 2nd because we're already in that 2-week range. And if it's going to be anything like it was today as of the time of recording this video, then the stock is going to do terribly on earnings because today was amazing. But if you'd like to hear why I think SoFi has a competitive advantage overall, make sure you guys check out that video right there. But if you haven't already, make sure you guys like the video and subscribe down below if you want to see more financial content just like this.